All right. Good morning, everyone. Happy Tuesday. We'll give a minute or two for people to log on to get some live viewers, and then we'll begin. All right. Okay. I think that's enough time. Good morning again, everyone. Welcome to today's Small Business Resilience Workshop on tax considerations and strategic planning for the season ahead. We're very glad you could join us as we navigate one of the most critical times of the year for small businesses. We know that tax season isn't just about compliance, it's about strategy, sustainability, and setting your business up for long-term success. And at the Chamber, supporting small business resilience means connecting you with trusted experts who can help you make informed financial decisions, strengthen operations, and just really plan productively. So that's why we're especially proud to highlight that today's presenter, Jane Chow, founder and CEO of CKYFS Inc., who also forms part of our Chamber network. But before sharing more about our featured speaker, just a few housekeeping instructions for those viewers joining us live. Please feel free to type in any questions you may have for Jane in the chat box of the platform that you're using. So we'll make sure to address them at the end of Jane's presentation. And if any other questions come up but don't have the time to address them, I will make sure to share Jane's contact information to support you later. So without further ado, just a brief overview of CKYFS. They are a premier provider of comprehensive tax and financial services, offering a lot of tax preparation, precise business payroll tax services, and strategic tax consulting. Jane brings an extraordinary depth of experience in this topic. She has served on the IRS Electronic Tax Administration Advisory Committee, just advising on national tax policy and digital compliance. In fact, in the summer of 2025, she spoke before members of Congress on behalf of the committee regarding federal tax administration and policy considerations. And something also important to note is that her background also includes distinguished service in the U.S. Navy, where she refined her tax expertise at the Fort George Meade Joint Installation Tax Assistance Center, earning her the Army Achievement Medal of Meritorious Service. So we are truly fortunate to have someone with both policy level insight and just hands-on experience guiding us today. So Jane, thank you for being a valued member of the Chamber community and for helping our small businesses stay resilient, informed, and just strategically prepared for the season ahead. So Jane, without further ado, please take it away, and we're excited to hear more about you.
Great. Thank you, everyone, for welcoming me to this webinar. So right now we're talking about for 17 years I have worked with small businesses and entrepreneur professional, helping them navigating tax compliance planning and business structure. Today I want to talk about small business tax policy, not from the perspective of complicated tax code. Instead, I want to talk about how tax policy affects the way of a business actually operates. One thing I have learned over the years that the most tax problems don't start with the IRS. They start with operation problems inside the business. Why tax policy matters? It matters is because the reality of tax policies only once a year. Many business owners think about taxes only once a year during the filing season. But in reality, tax policy affects several critical areas of your business. Cash flow, business stability, lending approval, audit exposure, and long-term growth. For example, when banks review a loan application, one of the first things they look at is your tax return and financial structure. So taxes are not just compliance. They are part of operation strategy of a business. Reality for small business. In practice, most small businesses face very similar challenges. They often have limited internal control, rapid growth without structure, compliance confusion, heavy reliance on technology, and very limited time. Because of this, many operational issues eventually become tax issues. A bookkeeping mistake may become a tax mistake. A payroll issue can become a compliance issue. And the number one risk, lack of structure. The most common risks I see are not complicated tax issues. They're basic structures issues such as mixing personal and business finance, incorrect entity setup, missing documentation, reactive tax planning instead of proactive planning, and contractors misclassification. The businesses that perform the best usually have the clear policies and structure in place. So here's are the structures here. And then many of my clients would ask me, which ones should they be? Should they be a sole proprietor, LLC, S Corp, or C Corp? It's really what they wanted to do in their business. I do have clients who are a sole proprietor for the last 20 years. Then I have some clients who are S Corp for the last 10 years. It all depends of what your business want to do, and then of how they will give you the structures. So in here, with the business entity overview, another important factor is choose the right business structure. Most business begin with sole proprietor because it is simple. As the business grows, many transition into an LLC, S Corp, or a C Corp for large growth strategies. The key point is your entity structure should evolve as your business evolve. And so it highlights something very important here, documentation. A strong documentation policy includes a separate bank account, digital receipts retention, mileages tracking, written contract, and proper expense documentation. This is a simple run in tax compliance. If it's not documented, it doesn't exist. The single issue is responsible for many tax problems I see. And cash flow versus profit. Another concept that many business owners struggle with is the difference between revenue, profit, and cash. Revenue does not equate profit. Profit does not equal cash available, and cash available does not equal tax liability. This is why I recommend business create policies such as maintaining a monthly tax reserve, conducting quarterly tax planning, forecasting tax obligation in advance. And then mastering the estimated tax. One of the most common challenges for businesses is estimated taxes. Many business owners forget about quarterly payment, or their income fluctuate throughout the year. A simple strategy is consistently reserve around 20 to 30% of income, depending on the business structure. Planning ahead help ensure taxes are never an unexpected financial shock. The compliance environment today is becoming more complex and more digital. Business must maintain accurate financial reporting, proper payroll management, reliable information return. At the same time, technology plays a bigger role in compliance. More financial data is now automatically reported through the digital system. And IRS still rely on more of the digital reporting as of now. Another topic that many people doesn't associate with taxes is cybersecurity. But business handle extremely sensitive information such as social security numbers, financial records, client identity information. A data breach can create not only financial loss, but also regulatory and compliance exposure. Protecting business is now part of responsible tax and financial management. When we talk about audit, many people worry about IRS, but audit readiness is really about maintaining consistent record year-round. Common audit triggers include excessive deduction, inconsistent reporting, contractors' errors, and poor record keeping. Businesses that maintain organized documentation are far less likely to encounter serious issues. Tax planning is not just reducing tax today. It also supports long-term goals such as retirement planning, real estate ownership, business expansion, succession planning, and even exit evaluation when selling a company. And at CKYFS, we often talk about 3 pillars for building a strong organization: structure, compliance, legacy. Structure ensures the business is built correctly. Compliance ensures discipline and regulatory alignment. And legacy focus on long-term sustainability and impact. To summarize today's discussion, choosing the right business structure, maintain accurate documentation, plan for taxes proactively, protect your data, and always think about long-term growth. And thank you to take the time to join today's sessions. I appreciate the opportunity to share these insights with you, and I'm happy to answer any questions.
Thank you so much, Jane. This was very insightful, and I'm sure there's plenty of questions, whether they'll be posted on live or shared with us later. But something that, I mean, to start off the questions, if anybody else has anything to add, please add to the chat box on the platform of your choosing. But considering your experience and your time advising on federal tax policy and digital compliance, how do you see the tax landscape evolving over the next few years? And sort of what key milestones or challenges should small businesses be preparing for, particularly around regulatory challenges or enforcement trends, any reporting requirements? Yeah, what can you tell us about that?
Right now, the IRS is pushing hard on the identity theft issues. So the whole bunch policy is pushed for that. So anyone who will fall under the identity theft become a victim of it, it will take about 2 years to recover the whole process. And for anyone who fall under that issues will be reporting to IRS, and then there are different policy in place to help the victims in that aspect. And then for the other things are the landscape of it is let me see here. The other things are it is pushing for, give me a minute. And then for the regulatory, it's pushing more toward the Okay.
So for the identity theft issues, that would be sort of qualified under enforcement trends, right?
Yes, it is.
Gotcha.
Uh-huh. For the business in 2026, it is a year of more reporting, more visibility, and more pressure to plan ahead. The IRS is expanding digital administration, and the current rules reflect changes already incorporated into the 2026 inflation adjustment and recent federal tax legislations. On the business side, one major point is expensing and depreciation. Recent IRS guidance say that most qualifying business property brought in place in service after January of 2025, business may deduct 100% of the cost in the first year. The IRS also noted expansion of Section 179 expansion with a 1 million deduction limit and a 2.5 million phase out threshold under the newer law. That matter because investment timing now has a direct tax planning impact. For small business owners personally, the 2026 also bring update threshold and the inflation adjustment. The IRS announcing the 2026 standard deduction at $32,200 for married filing jointly, $1,600 for single filers, and $24,150 for head of household. Even my talk is a business focus, these personal side numbers still matter because most small business are passed through entity and owner's personal return is part of the planning conversation. Another practical issue is cash management. IRS's publication 334 says that the 2026 maximum self-employment earnings subject to Social Security tax is $184,500 and the business mileage rate is 72.5 cents per mile. These are the kind of details that affect budgeting, reimbursement, and estimating tax planning during the year. And finally, the broad message for the 2026 is tax administration is getting more automated and more data driven. The IRS has highlighted new form and new reporting workflow for the 2026 filing season, which means businesses need clearer books, better documentation, and stronger system that they could get away with in the past. So the 2026 tax landscape is not just for the rates, it's about timing, documentation, digital reporting, and proactive planning.
Gotcha. Jane, another thing that you mentioned during your presentation, I mean, one of the most common challenges of where businesses, when it comes to their structure and their reporting, you said documentation or even sort of not enough tax planning, like mixing personal and business funds. What would you recommend when it comes to what strategies or what have you seen from your clients to use when organizing or setting up a structure to really have these on hand when tax season comes across? Would it be like charting? Would it be sort of segmenting certain documents? What would you recommend for what do you typically recommend for your clients to have a structure set up for next year?
Usually, when a new client come to me, and then when they're just starting their business up, I tell them that first of all, they would have to apply for an EIN, which will put them into a more business sense. So they have the EIN, then they will go to their bank and set up a business account. And shifting of what they have been using is usually they use their personal account to cover businesses. So I would tell my client is that's when you will contact their vendors or their providers or their service saying, please start paying me through my business name. And then providing all these information to them. So that is how they start to separate themselves from their personal to their business. And they're just kind of constantly reminding themselves that, okay, I have a business. I need to start presenting to other people around themselves that they're a business. And sometimes some of their vendors or the providers are still going to push for the personal, but then that's where they step in and say, no, I do have a business. Here's my business EIN numbers and such and such. Okay.
That's a great thing to add as well. But maybe my question was more along the lines of how do you keep track, I don't know, of expenses? So what strategy would you recommend for your clients to keep track of these very meticulous points of information?
I would recommend them with few apps that I use for my business. So like one, I would, for the mileage um, portion, I would recommend using any mileage trackers. But personally, me, I recommended Trip Log. I've been using that app since 2013. It's a very powerful app that will track all the mileages the moment that you start moving or whatever. It has the power to track. You can set it when you start moving, when you start working in your business. And it does track international. So any client who does go international, it will track it for them. And then for the other one, I would recommend it Wave. It's another powerful accounting tracking for them. Veer away from QuickBooks because QuickBooks have subscriptions, and most of my client doesn't like to pay subscription. And Wave is a one-time yearly payment, which is more appealing, and it actually works as more powerful, and it will track of all their expenses through the Wave. And then with the Wave, that's just from the accounting perspective, is they will have to set their chart of account, and then from there, once they set that up, it is seamless and it will track that for them. It takes lesser time from them to just worry about their accounting, which they can focus on fully in their business.
Gotcha. Those are great recommendations as well for anyone just to get up online, and it makes everything easier. So thank you for recommending those. Maybe one last question for my behalf, as I see there's no questions online yet, but I'm sure you'll get some when I share your email address again. You mentioned a bit during your presentation on like the cybersecurity measures required, and how tax compliance now involves protecting this data. Do you mind tapping into that a little bit further? Is that something specific for the business of its own, or is it something to keep in mind during the whole year and not only the tax season? Could you elaborate further on that one?
For the cybersecurity, that is for all businesses. All businesses who are in contact with other businesses and their data. So it is not just for my business, it's for anyone who's dealing with the public and you're getting from their information. And then you want to keep your business secure in the sense that no one can come into and have a data breach, which you have here over the years of such large company. They have data breach and people's information just out.
Yeah.
Okay. So that is applicable for all businesses, I like. Okay.
All right. And just to close off, what if you'd have to pick one, if you have to give one piece of advice to a small business navigating this ever-changing scene, what would it be to keep a small business? What would your advice be to keep a small business informed when it comes to tax compliance?
Just stay on top of their own finances, then just find a good tax professional. So
For sure. And they have one on here, and I'll make sure to share your email address right there on the screen. But it was a very quick workshop to get everyone in on the same boat when it comes to approaching this tax season, and we just really wanted to highlight Jane's work and offer her services to anyone else that might be looking for a tax professional this season. But again, thank you, Jane, for sharing your insights. Anyone on the audience, anyone seeing this on demand, feel free to reach out to me in case you have further questions. You can find my email address or contact information at the chamber website at sdchamber.org. And before we log off, I just wanted to let you all know that this workshop is part of the Chamber Small Business Series, where we offer workshops, training, and just valuable convenience to support the resiliency of small businesses in our region. Our next event within the series is the first of its kind. It's called San Diego Business Giants: Lessons for Small Business Success, featuring San Diego Football Club on Thursday, April 2nd. This is an in-person event, and this particular convening will explore high-level insights from this major sports leader that can be applied to small business growth and success. So please check it out at the Chamber's events calendar at sdchamber.org. And with that, I also want to thank you all for attending, and just looking forward to seeing you soon at this April 2nd event. All right. Have a great day, Jane. Have a great day, everyone.
Bye.